Hello everybody, in this video I'm going to be doing a brief stock analysis on GameStop, and if you do end up enjoying the video, please come check out my channel as I do a lot of other brief stock analysis videos very similar to this one. Here we can see GameStop ticker symbol GME currently at $3.65 a share, and in the last 5 years it's down 91%. And what's really scary is that the stock price has actually come down 53% just in the last 3 months, and I'm actually going to cover why that is in the rest of this video. And I also just wanted to take a look at their revenue and earnings on Yahoo Finance really quickly, and their revenue actually surprisingly not looking too bad for the last 4 years, and it's their earnings that are really tanking, with them barely breaking even in 2018 and then really not doing well in 2019 and probably never seeing profitability for an entire year again. And then what's a little bit surprising is that the analysis recommendation rating on Yahoo Finance is currently at a hold, and the analyst price target is at $5.91. So I'm thinking this is a little bit outdated from the analyst price target and the recommendation rating. And when this does get updated, if it even does, it's going to look a lot worse for GameStop. And then if we actually look at the recommendation target price from the top analyst, it is actually at $3, which would give GameStop a sell rating. And then it's listed at a 30% discount, which is actually great for value traders looking to make a quick buck on the stock. But if you were to take into account a lot of other factors like the general outlook of the company moving forward, it's really not at a discount. It's really just taking into account their assets, which are currently pretty high compared to where the market cap of the company is right now. So honestly, right now, I don't think growth investors should be interested, or dividend investors. They currently just got rid of their dividend. Actually, it was at almost 35% at one point before they got rid of the dividend, which is going to save them $157 million every single year. So other than those involved with the company or day traders, I don't think there is really any appeal to invest in GameStop for the short term, mid-term, or long term. I actually think GameStop will not go bankrupt for about 2 more years, and that might actually be surprising to some who are familiar with the stock and how they're doing as a company, and I'm going to get into why. Even though pre-owned game sales have been declining year over year for the past several years, GameStop still can make a ton of revenue from all of the assets that they do have in pre-owned games through various sales. Another reason GameStop may be able to hang on for another 2 years, even with the rapidly declining profitability, is their biggest expense is actually their employees. GameStop is not having to pay a lot for warehousing, they're not having to reinvest a lot of money into the company, and they're not having to pay a lot of the expenses that a lot of tech stocks are having to. So if they're able to keep their expenses pretty low, then it's okay if their revenue does start to decline pretty rapidly. As I've kind of already mentioned, GameStop can continue to just close down their least profitable stores, which will keep the business alive and keep them from going bankrupt. Another thing GameStop can do to increase the stock price so that they don't get delisted is to do share buybacks as the CEO and the company. And what that does is increases the stock price for the short term, so that can keep the stock under or over $1 so that they don't get delisted and can keep their market cap at a reasonable level. These are the CEOs of Sony and Microsoft, respectively, and one may think that it's actually in their best interest to keep GameStop alive, and that's actually not true at all. These CEOs and the companies Microsoft and Sony can make a ton more money from selling games off of their own platforms from PlayStation and Xbox than they can from GameStop. What GameStop is doing is they have a wholesaler and a distributor, which eats up profits, and then if they're selling a new $60 game, Microsoft and Sony are getting a smaller portion of that. But when Sony and Microsoft can sell their games directly to the consumer, they're making a lot more profits because they're not having to make a physical game and distribute it to the various stores and pay for warehousing, and it's basically just improving profits dramatically for these companies. I don't usually do these types of videos where I look at stocks that are in a rapid decline state. If you would like to check out investments that are really good growth opportunity stocks, then please come check out my channel and subscribe for more content. Thank you so much for watching.